We are keeping an eye on Netflix, tumbling after weaker than expected revenue guidance and announcing plans to stop reporting subscriber numbers. CNBC.com's Alex Sherman joins us now with what all this means and how the street's taking it, Alex.
Look, I think from a narrative standpoint, Netflix's decision to stop reporting quarterly subscriber numbers in the first quarter of 2025 is the most interesting because it really marks the end of an era, right? It marks the end of the streaming wars as we know it. I mean, shorthand, the first metric that investors and consumers alike would talk about in terms of comparing streaming services was, well, how many subscribers do they have? And Netflix has always been by far the dominant player in this world with, 270 million plus subscribers. The fact that they're not going to announce this anymore, at least from a quarter-to-quarter basis, is a suggestion that A, maybe subscriber growth is going to start slowing in 2025, but B, they want the street to start valuing the company on other metrics like revenue and profit and free cash flow. These aren't maybe as handy as number of subscribers, but they are what other businesses are in fact, judged by. And they do provide a more specific, accurate assessment of the business.
For sure. I always feel like, sometimes when companies do this, I mean, of course, Netflix and Disney at some point stopped giving guidance on sub growth, I guess, not that long ago. I can think of other industries where they basically said, not just we want investors to focus on something else, but internally within the company, they want to make sure that, everyone is playing toward the proper benchmark in a way and don't get too caught up in the short term. On the other hand, you did allude to the fact that maybe it means, sub growth is decelerating, or maybe the benefits of the password sharing crackdown, maybe they've seen, the extent of it. I guess I'm trying to find other explanations for, this stock getting knocked down 9%, except for the fact that it's a tough tech market.
Yeah, look, you alluded to the fact that there was weaker revenue guidance, particularly in the second half, a little bit of revenue growth deceleration coming that maybe analysts weren't expecting. And that's one reason I think the stock is down. But look, I think to your point, we've seen a nice rebound of Netflix since 2022, when really the floor fell out in the stock. And that's when subscriber growth plateaued after soaring during COVID. So this idea now that they're not going to report subscriber ads every quarter is at least a suggestion that this sort of unexpected rebound, which was really driven by the password sharing crackdown globally, may finally be coming to an end. And it's been a great story for Netflix, and it has, in fact, coincided, led, whatever the word you want to use, to a nice rebound. So look, the evidence there is that investors are, in fact, trading off subscriber ads. It is an important metric still. So that I do think is a reasonable reason why the stock may take a dip now. Now, look, if Netflix keeps pouring out great revenue and free cash flow and profit numbers in 2025 and beyond, investors will probably move to that metric and be fine with it. If the business is healthy, the business is healthy no matter what metric you use.
No, there's no doubt about that, although it's interesting, as the stock has rebounded so strongly and got not too far from its former all-time highs, and of course the valuation gets a little bit elevated, a lot of the sell side in trying to defend the bull case would say, well, what you really care about here is what percentage of global broadband subscribers Netflix penetrates, right? I mean, it's like 40% now globally. It's like 75% in the U.S., I think, if you include, multiple users in a household or something like that. In other words, everybody was sort of fixated on this one goal of getting that number up. And so I guess it just means you don't quite have the ability to track it in a fine-tuned way.
Look, this company has gone through a series of waves of, what is the right goal to reach here? There was a time where analysts were throwing out a potential TAM, total addressable market, of 800 million global subscribers for Netflix. I mean, those days are way over now. I mean, no one even talks about 500 million as a realistic goal anymore. But on the other side, Netflix has 75 million U.S. and Canada household subscribers. The whole traditional cable bundle only has about 70 million. So that's a real win for Netflix. That's a success story.
For sure. Well, I remember a time when postage rates were a huge mover of Netflix stock because they were throwing DVDs in the mail all the time. So this is a company we should remember that has managed to navigate multiple different kind of cycles and innovation waves.
Yeah, exactly. The DVD days are over. The streaming days are here. and there will probably be a next wave, and Netflix will likely have to iterate one more time. We're seeing it already with live sports maybe as the next thing that Netflix gets in. The NBA rights are up fairly soon. We'll see if Netflix plays there. They inked a deal for WWE, so it is quite possible that in the next 2-3 years or so, Netflix gets into live sports, which is something that they really have not done in their history.
Yeah, they've not done that in their history. It's interesting because they've kind of broken a couple of rules along the way in terms of things they said they might not do, of course, advertising being one of them. But we'll see how it goes from here. Alex, appreciate it. Talk to you soon.
Thanks, Mike.